This is Alan Bush with the Daily Financial Forecast for Thursday, August 18th. Starting out with the stock index futures, we are seeing prices just a little bit higher today, recovering from some mild pressure in the overnight trade. But first of all, yesterday's session, especially late in the afternoon, we did see some recovery gains in the indices. This after the release of the July 27th minutes from the Fed meeting, indicating that they were a bit on the dovish side. Some analysts were anticipating that they might be talking a bit hawkish, which was not the case. So stock indices firming yesterday on those minutes. We do believe that the main trend is still higher for all of the major stock index futures, as the Fed is likely to be very slow to raise interest rates, and global inflation levels will probably keep interest rates around the world relatively on the low side. So nothing changing in our long-term view on the indices. Look for more of the same. Higher prices appear to be likely. Now, moving over to the currency markets, the FOMC minutes were, as we said, a bit on the dovish side. That was a bit of a negative for the dollar index yesterday. Also, we are seeing some follow-through weakness today in the dollar index, but I think we're getting into an area of support. Also, the Fed still is the only major central bank that is likely to raise interest rates within the next year or two. So even though the Fed may be slow to raise rates, I think interest rate differentials based on the probability of at least a rate increase somewhere down the road should be supportive to the dollar index. Now, moving over to the British pound, good gains there as retail sales in the UK coming in much better than expected, coming in up 1.4% versus the estimate of up 0.1%. But I think any strength in the pound should be used as a selling opportunity, since interest rates in the UK are likely to remain low and possibly get even lower. And in the commodity currencies, the Canadian dollar and the Australian dollar, higher prices there linked to higher energy prices, at least the crude is higher. Also, we had the gains in the Australian dollar limited by a mixed to slightly negative employment picture in Australia. But longer term, I think the commodity currencies will probably do relatively well if we are correct in our thinking that industrial commodities have bottomed and are likely to head higher across the board. That would include the copper, the crude oil, industrial metals overall, all are likely to work higher with what we are seeing. And in the interest rate futures markets, some gains yesterday after the minutes were released, a bit of a follow-through to the upside today. But longer term, we feel that inflation will gradually become a problem. Now, the Fed does not see inflation yet. In fact, they stated so in their minutes. We see inflation, very gradual inflation to begin with, but accelerating down the road. So look for inflation to become a problem eventually, which is why we are remaining very bullish on the gold and silver markets and negative on the interest rate markets, especially the 30-year bonds. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.